Chicago wheat. Let's take a look at Chicago wheat. My name is Trent Klarenbach with Klarenbach Research. Today is March the 28th, 2025, and this is the weekly chart of Chicago wheat. It is the continuous chart, next contract in front, and each candle represents 1 week. And what I did is I used the logarithmic chart here. I like drawing trend lines on log charts, connecting the top of the candle bodies all the way down here. And you can see, that's a nice little trend line there. Other people must be drawing a similar trend line. Now keep in mind that trend lines should be drawn with a crayon and not a pencil. Some guys like to do a band connecting the top of the wicks, and that could certainly be appropriate here too. You might have a large band here connecting these wicks. But I tend to do a best fit line connecting the tops to the bottoms of the candle bodies. So there's different ways to do it. There's no right way. But keep that in mind here. I do this bottom trend line as a level of support connecting the bottom of the candle bodies. And it looks like, let's just kind of zoom in here a little bit better. It looks like we're going to have a weekly close kind of above that trend line, which is kind of interesting. So we'll see if that, well, it looks like it happened. But I tell you, we keep testing this bottom here. That's 1, 2, 3, 4, arguably the 5th, maybe the 6th, 7th test of this area of support here around that 530, 525 level, 520. Each test exhausts the buyers. There's less and less buyers with each test. And you can see with the first test, we got the rally up here to this, again, the 200-week moving average. The next time we tested it, the rally wasn't as strong. We tested it again, a little bit stronger rally. But we found some resistance, found some selling at that 617, 620 level. Came back down, we're testing it again. So I'll have this 5 or 6, maybe it's 7 tests. I don't know. You can do the math, but it's a very significant level. If this level doesn't hold, then I think, we're going down to, we're losing another 50 cents a bushel. We could probably always go down to $4 a bushel, easy enough. Test those previous lows from 2017, 2016. Is it possible? You think it can't happen? Well, it certainly can. The market does not care about our needs or our opinions or what I think. I did get some hope, though, when we broke this upper trend line. And we got the retest, which I anticipated. But we're not finding buyers here. Didn't find buyers on the retest. We really need to get some buyers stepping in sooner. This thing is going considerably lower. This purple 200-week moving average has not been retested since back in June of 24, almost a year ago. I think it will get retested again, but hopefully it's through space where the price rises to it rather than through time when we have some sideways consolidation and the moving average comes down to the price. Now let's talk about stage analysis here. Stage 1 accumulation, stage 2 markup, stage 3 distribution. We've been in a stage 4 decline, I would say, from June of 2022. And right now we're having this consolidation, this sideways consolidation, which could indicate a stage 1 accumulation. The stage 4 decline could be over. So keep an eye on this. If we get below $5, or even $5.20, then I think we need to really be cautious, protect our downside risk. But we look at the daily chart. Let's make it look here a little bit. Yeah, we're below these moving averages. And this Paul Tudor Jones has been been credited with the saying, nothing good happens below a 200-day moving average, and we're certainly below there. So keep an eye on this level. Hopefully the buyers step in. We break above this upper trend line, make a new high above 575, and then I think we can be bullish at that point. But right now, we need to be extra, extra cautious and have a plan to protect our downside. My name is Trent Klarenbach, sunny in Saskatoon. Life's good.